Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Tuesday, and we are now on December 8th, 2020, and we are now at about 6:15 p.m. Central Time. So as the markets reopened, they got another lift. It's sounding more and more like it's very possible, I didn't use the word probable, possible, that we're getting to the point where Mitch McConnell and Nancy Pelosi can make a deal. It sounds as though in order to make it, Mr. McConnell said, hey, if you don't give us what we want with the protection for companies against COVID cases, then you can't give money to cities and states out of that $908 billion. So it's a tit for tat. If both come off the table, a deal. If both are left in, sounds like a deal. That's a better shot than not having a deal. And I don't think he'd be saying all that if he didn't have the votes lined up in the Senate. So that's a different change. And once he did that today, you saw the markets reverse course. Important. Then come Thursday, we're waiting on the FDA to come out and say, it's your time, America, go and start your vaccines. That's what we're basically waiting on. As you saw in the UK, they did that already. As for the UK, when I talk about it, tomorrow evening, Boris Johnson and the head of the European Union will meet and see if the two of them, instead of all the negotiators with them, can get to a point of a deal or if Brexit is going to happen. I think you've run out of time, so now it's decision time. I don't think it's going to go another week unless they both walk away and say, yes, there's enough give and take, let them go sell it to their sides. But if the deal stays as it is and there's no movement basically on either side, over. Brexit occurs without it. It's a big undertaking to not have all these trade deals in place. So that's something else to think about. A lot of central bank meetings this week. You got to keep your eye on all the different moving parts to this. The European Central Bank meets, and while people think that the analysts think that Ms. Lagarde won't touch interest rates, you know, she could surprise the market and spend more in that bond buying program. What's wrong with another 500 billion euro? It's her way of putting a stamp on it. She doesn't have to spend it, but she could say, we have the funds to do it, and that's what we're going to do, and boom, you could get different things done. Beware, this is a big deal. She said December was going to be an important time. We'll see if she's just talking or if she's going to put a surprise in the market. As we come over to the S&P, a new all-time high close. Let's just applaud it. I mean, here it is. That's important. Now, it's not a weekly chart high close yet because it's only Wednesday trade, but we're there in high closes, and you can see that on this chart. If you're one of my traders that get my morning subscriber video, you should be jumping up and down for joy. You had a good day. You know what I'm saying? And by the way, our cyber sale is probably the best sale I ever did. It's more responses than I've ever seen. People are really buying the one-year charting research, cheap by the way, $156 or $400, $600, depending on which program you choose, and they're getting the free charting course, a $199.95 value. That's not going to last forever, so you might want to take advantage of it. I'll talk about it in a minute. But as you can see, we're still moving up, and here's what I like. If we take a look at today's data, let's go to yesterday. The high was 37.05 to 36.72 in a quarter. Today you took out both numbers, so you have an outside day up. What don't I want to happen? I don't want to see today's lows taken out again, either tomorrow, Wednesday, or Thursday, because that would be the end of this move to the upside in the near term. Why? I have a rule that if you take out the low of an outside day up within 2 trading sessions, it's often a sign that you have what's called a bull trap, and the markets try to go down to the closest moving average. That would be, in this case, 36, 33, let's call it 50, the 18-day average of closes. So it's not like I'm looking for a crash, but that would certainly end this pattern. What about resistance in the market? Well, it's jumping up. Originally, it was around 37.12 today, and that number just took off afterwards. You came up here to 37.22 as the day went on, and now you're adding to that closer to the 37.30 level. So that seems to be the target, another 18, 19 handles higher, and you have the embedded reading. And you know I go nutty when I see these embedded readings if you know how to play them. I'm not saying you don't. I'm saying I think I've got a better handle on it than most. That doesn't mean I'm always right. You know, if you could see me and I looked like a piece of Swiss cheese, you'd understand 5+ decades of trading. And if there's something to do wrong, I want to tell you this proudly. I probably did it wrong. That's how you learn. Only a fool keeps doing the same thing over and over, getting a bad result and thinks it's going to suddenly change. So you've got to learn from those things. So this is still bullish. That's what I'm trying to say. Unless you take that number out, the target could be 3730 level. And as long as the embedded slow stochastics stay in place, I'm overall bullish the market as well. In the NASDAQ, you've locked in your embedded reading. It's the same thing. Until that's lost, I look for the pros to be buying the break, still looking for the upper Bollinger Band. I think they abandon ship if you lose the embedded reading. Did not have the outside day up in this market. In the Dow Jones, the market did not have the outside day, just the higher lows, higher highs, and now an embedded reading. So they've all joined in the parade here of really strong bullishness by getting the embedded readings again and keeping the trends with the swing lines all in line to the upside, including the Russell, which doesn't have the swing line up. It's got the embedded reading that it hasn't given up on. If you don't believe on how to play with slow stochastics, you should take this charting course, because this whole area is one that I tell you about. And if you take my morning subscriber video, I just hammer it into you what to be doing. If you don't like what I'm doing, write me on YouTube. I get the opposite from people. They're writing me, Ira, what a change. You've taught me some things that we haven't seen. And everything has to have a way to get out if the market turns against you. So I'm not just trading these things or making, when I say trading, making recommendations for you to trade without doing it. Otherwise, why do this? I mean, that's part of our business. We're commodity brokers. We want your brokerage business. Our feeder into it is the research. And then we can give you other things that I don't think you'll get everywhere. Another thing, you're out there trading. Maybe instead of worrying, gee, what am I paying on a commission? I don't want to trade for $2 or $10 or $15. Why not? If you get a pro that's going to hold your hand and help you, why not? Never did understand it. Not everybody's equipped or can be a self-directed trader. It's lonely. It requires tremendous discipline. Just warning you about that. I think the old style is the way to go if I were in this. I want to bounce my ideas off somebody that knows, at least I think they know what they're talking about. Nobody walks on water, including that person you choose. They too will have losers. Everybody does. Lower low, higher high, nothing to do there. VIX cash, you're stuck in this sideways action. You lost the embedded reading. You went back to the 18-day average. You're still oversold and not trending. And if you'll notice, the market's also not crashing as you're going down as you're rather going up in stock indices to these new all-time numbers. That tells you that we've reached a zone where you're not going to go like you were last year into a 10 or 12 number, if you will. You're going to probably stay at higher numbers, because the higher we go, there will be a correction. And the smart money realizes it. Nothing grows to the sky. In the T-bond market, we've got that pattern now where we came down. If we look at the high right here, that number is 173.16, and this rally high was 173.15. I should have taken this blue line, the arrow right here. As soon as I saw this just now, I realized that I should have an arrow up and an arrow down. You're out of the trend. You've come back into neutral zone of the 18-day average of closes. I have it correct here. I missed it in the other market. I don't keep these on my chart. I do these for you, so sometimes I just miss one. But you've got the lower low, higher high. I'll call that neutral. Dollar index. I think the pros want to be short the dollar index, but I'd be very careful right here. If you lose that embedded reading, you want to see that it stays with that. Yeah, then I'm all for it. Lose that, you can get back to the 18-day average, which on this daily chart doesn't really do any damage to it. I think that doesn't change the overall downtrend. And in the euro, be very careful here. You're starting to get to the point where it doesn't take much to lose that reading. Plus, you have the European Central Bank meeting. I think it's Thursday. I would not be surprised if Miss Lagarde wants to go out and throw a quickie at the market. She could add money, maybe 300 euro, 500 billion. We're talking billion 300 billion, 500 billion euro to her bond buying program. That could be something that would surprise the market, and that would keep interest rates on the downside and keep the back to this market, maybe act like jet propellant. It could kick the market to the upside. Wouldn't surprise me. In the yen, we've got a pattern where the market just seems to want to hang around the 18-day average of closes. While the trend is up, I don't trust it. I just see that sideways action. And what else I see is the Bollinger Bands are starting to wrap their arms around price. I think that for the moment at least, the volatility wants to come out of this market. Bitcoin's done what I've been expecting. It was even back here when you had lost the embedded reading. We never did get to the 18-day average. Then we got overbought and arced down. Then we started the pattern of lower highs with higher lows. I want to make that very clear. You lost your way in the market. You had higher lows, higher high, and then if you do this, take this low out, watch out. Here it becomes. I'm going to come right through there. Game over. Now you should be headed to the 18-day average the way that I teach charting, and that's exactly what you've done. Now we wait and see. This is called neutral. I realize the bias is down now. The trend is down, the bias is down, and momentum's down. I'm not saying where it has to go to find its legs. I'm saying it hit a target, and that's all that I'm saying. In the differential between Brent and WTI, back up to the $3 level, I was surprised today. If you saw the API numbers that came out, a net build of nearly 9 million barrels, and the market is up. Wow. The market is looking over the shoulder at all these vaccine shots and saying, we know that we're building stockpiles right now, but that's going to go away as the vaccine comes out and people get back to their normal life. I don't have another explanation for it. Are we going to lose the embedded reading? You will if you're down today, even 50, 60 points. You probably will do it. So be cautious, but until it's lost, it isn't. At 9:30 in the morning, we get the EIA numbers. It's already got a negative number in front of it from the API, so even if you have a build of 4 or 5 million barrels, it might look friendly compared to that number. Heating oil, as long as you keep the embedded reading, I'm bullish this market. No reason you can't be looking at higher prices. We haven't had that first really hard cold spell go through most of the U.S. It will come. Mother Nature will only do this so long. Chicago's going to be in the 50s until this weekend, and then we go diving again. Maybe some snow cover in the city. We don't know yet. Natural gas, it needs demand from that weather break. In other words, it needs the cold weather. The mild weather's got to have a break in it before it can do anything. But it's running the lower Bollinger Band, and at any point you get a weather forecast, and it's like you pull the rubber band. It can bite you. Be very, very careful. Sometimes I decide that no matter what the chart pattern is, I just don't want to be involved in markets. And that's part of the discipline of trading and that I want to teach. My charting course does that. It's 6 hours of videos where you see what I do, you do the same, and in many cases I even close and don't cover. I cover the name of the chart. I want you to see patterns. And then via the morning subscriber video, you get to see with it, I bring you up to date with what it's done. Now let's assume you're a SPDR ETF guy. Same thing. You see what I do on a chart, you look at your SPDR ETF, and in the afternoon, I'm covering about 40 charts for you, reviewing everything you learn in the course each and every day, trying to instill upon you a trading discipline. It's like you're talking to me. And then in the live webinars, you do talk to me. We cover all these markets in the futures, and you know what I'm covering in the SPDRs and ETFs. And the idea is a trading philosophy. Are you stuck with what I do? No, consider it a building block. Add, do as you want with it. But it's $199.95 value for free with any 1-year subscription. Go to our website, take a look under research, buy one, you get the charting course. And yes, you start the course when you decide to, or you can even give it away as a gift. I'm Ira Epstein. Thanks for watching. Talk to you tomorrow.